And this is just a disclaimer. By viewing any of the material or utilizing the information on this session, you agree that it's general educational material and so on, right? Do not trade with money you cannot afford to lose, right? So Donnie, let me stop sharing my screen and you can take it over.
All right, where we at? Y'all can see my screen. 1 second.
Yeah, I see you. It's now coming up. Yeah, I see it.
We up now?
Yeah.
All right, what's going on, everybody? I'm Donnie. I'm a part of Legacy. I'm down here in Atlanta, Georgia. I'm gonna be going over how to identify Cypher pattern and the Gartley pattern. Try to break it down as simple as I can, so we know how rude Zoom is, so we'll just get started. First, we're gonna go over the Cypher pattern. Let me get one down. That's good. All right, what we have here is a bearish Cypher pattern. To identify the pattern, the market first has to make a impulse down that we call our anchor leg, our impulse leg. Then the market has to pull back to form a B leg. It has to pull back at least to the 382. It can wick past the 382. Oh, it can wick past the 382, but if it goes up to the 618, it is invalid. And we'll have to look for a different pattern, but it can actually break the 382. After a B leg has been identified, we got to bring out the Fibonacci extension from X to A back to X, and we need a 127 extension to be hit in order for us a valid C leg to be formed. Now, once we've identified our C leg, we'll be looking to enter the market at the 786, which will complete our D leg. Get that out the way. Now let's see. Let's go through one together. So, like I said, the market will come down and we'll have an impulse. This will be our anchor leg. Once we've identified the anchor leg, we'll have to bring out the Fibonacci retracement. Go from swing, how to swing. Oh, let me label this. I'm sorry. The anchor leg will be labeled X to A. Then we'll be looking for the market to form a pullback or retrace back to a minimum of the 382. Sorry about that. As I said, the market has to pull back to a minimum of the 382, can wick past the 382, but if it touches the 618, this is an invalid pattern. So we'll leave this here, and we're going to identify that as our B leg.
Oh, jeez.
Once we have identified B, we're going to use the Fibonacci extension. We're going to go from X to A, back up to X, and we're going to be looking for the market to extend down to the 127. Now, if it breaks the 127, that's fine. It can even break the 141, but it cannot close past 141. If it closes past 141, this pattern would be invalid, but it can break the 127. So we'll put that there, and we're going to label it.
Quick question, my man.
C leg. Go ahead, bro.
Now, if it do close below the 141, is that a continuation to the downside?
if it closes below the 141, this just being harmonic identifying, I'm just going to say that the pattern's going to be invalid. We're going to end up, if it closes below the 141, then we look for something else. We know it's not going to, we're not expecting it to come back up and close at the 786 anymore. We realize that the Cypher pattern is invalid. So we'd actually look for something else. Perhaps a continuance to the downside, but then again, it could break down here, close below the 141, and then it could still shoot back up. Probably still shoot back up and close at the 786, but staying disciplined to the harmonic game. And just as we're in harmonics, we're going to say that if it closes below the 141, that it is indeed an invalid pattern, and we look for something else. But yeah, definitely could possibly go to the downside from there. But having identified C, once we identify C, then we're going to look for where to enter the market at for our D completion. In order to get that, we're going to go Fibonacci retracement. Damn, if I can pull it up. What is this? Fibonacci retracement from X to all the way down to C. Now to complete D, let me get rid of some of these. In order to complete our D leg, we need the market to roll over and come all the way back up to the 786. This will complete our D leg, and we also will be looking to get into the market at this point. We'll go over entries later. Once you identify D, then you do have a bearish Cypher pattern. Any questions before we'll do a bullish one before we move on.
Yeah, I have a question.
Go ahead.
I seen that you drew your Fibonacci, your retracements from X to C. Usually, I mean, the way I was doing it is I was drawing it from A to B and then calculating the C, and then from B to C, that's how I would calculate the D. Is that the wrong way?
Well, D, and I don't know what's going on with this. Okay, here we go. D has to be in order to have D, it has to be a pullback from A to C. So I don't know how exactly are you trying to figure out D?
I would draw it from A to B, from B to C, and then I'd get D from, so I'd go from B to C. Yep.
Okay, and how would you? What would enable you to know that D would complete at the 786? In order to identify a correct Cypher pattern, because it has to be done in this order. D leg has to complete. It has to be a completion from A to C, and it has to complete at the 786. 786 of the A to C move.
Okay.
Pretty much the only thing that makes a valid Cypher pattern. So if your Cypher pattern doesn't complete at the 786 of X to C, of X to C, then it's invalid.
Okay.
Let's do a bullish one. If I can remove these drawing tools. Same for a bullish, just basically the inverse. Market's going to make an impulse. Once we notice that an impulse has been made, which is going to be labeled our it's going to be our X to, let's get out of here. It's going to be our excavate move. At that point, we would bring out the Fibonacci retracement. We look for the market to pull back to a minimum of the 382 to form our B leg. Again, we can break the 50 as long as we don't wick to the 618. Once we touch this 618, this pattern is invalid. Pretty much got to look for a different pattern. We won't be looking for, extension for the 127. So we're looking for this thing to come down to the 382 and not break the 168. We'll leave it here. We'll identify that move as our A to B. Once we've identified our B leg, we're going to take our Fibonacci extension. We're going to go from X to A, back down to X, wrong tool, X to A, back down to X, and I ran out of real estate. And we're looking for a 121 extension, which I don't know, I can't move my screen. You can see the 141 up there. I apologize, my screen, I can't make it smaller for some reason. After B has been identified, we're looking for the market to extend past A, in fact, to the 127. The 127 is a minimum requirement for the Cypher pattern and the C leg. We can indeed break the 141, but we have to close below the 141 for this to be valid. So if it closes above the 141, invalid pattern. Leave it here at the 127. Like I said before, we'll be looking for, label that, I don't want no confusion. After the C move has been identified, we'll be looking for the market to pull all the way back from X to C to the 786 to complete up. Hold on, man. What's up, bro? Yeah, glow in the dark. Look, I'm doing a session. I'll come back out in a minute, okay? Sorry, guys, kids. Okay, 786 for the decompletion, where we'd be looking to get into the market. Long in this case. And here would complete our bullish Cypher pattern. Do I have any questions before we try to find some in the market?
Yeah, first off, I appreciate the session, Danny. So when it comes to harmonic patterns, who taught you how to trade harmonic patterns?
I learned everything I learned about this trading game. FX Legacy, JM Pips, my mentor, the guy who pretty much showed me everything. All of the information I use, you know what I mean, sessions every day. The main thing is the legacy sessions, those daily sessions, 8 o'clock, 9 o'clock a.m., 9 o'clock p.m. That's where I learned how to do all of this at right here.
That's awesome. That's great. I'm definitely going to get plugged in. Thank you.
Not a problem, sir. All right. Now let's go try to find some ciphers. Actually, we're looking at the DXY now on the dollar on the daily chart. This is actually cipher pattern right here, what we're looking at. I don't know if y'all can see it, but we actually have a cipher pattern right here in front of us. So let's identify it. Just like before.
Yo, real quick, Donnie. First and foremost, I appreciate you even doing the session for Legacy. For anybody who's in the session right now on some real, this is nuggets. The individual that you're learning this from right now, you should definitely take notes. You should definitely be listening. I know for a simple fact that I'm the individual who has taught this man. I wouldn't say a lot, but just a little bit. And he has taken all the information and he's giving this to you guys as just free value. So I just really wanted to iterate the simple fact that Donnie, I am more than appreciative and more than grateful for you to even do the session. And I feel like everyone else should be really, really listening and really taking notes, because this is something that is going to change their trading out view and just how they actually trade the markets in general. So I just wanted to give a real big shout out to you, my man, real quick, because you definitely deserve that. So I appreciate it.
Hey, bro, I appreciate it, man. I'm just giving back, man. You do it every day. Hey.
Hey, man,
your consistency is why me, Caribbean Blue, and everyone else is your consistency, bro. And I don't know why my screen is.
Oh, no, you straight, bro. You straight. No, I just really wanted to say thank you and appreciate everyone else for being on the session as well, because that's really, really important that everybody else is obviously taking the time out to gain more knowledge and to gain more nuggets and to be able to expedite their learning curve and learn something such as harmonic. Really, really difficult. Like, I don't know if anyone understands how difficult harmonics is to trade, and also how expensive it is to learn how to trade this. And the fact that you guys are learning this the way that you guys are right now. So real big shout out to you and just everyone else on the call real quick. I just definitely wanted to say that. I see everything, man. I'm here. If you have any questions or anything, like if you don't know how to measure something out, like I know you do, but if you have any questions or you need my input or anything, by all means, I'm on the call. Just reference for me and I got you.
Definitely, bro. I appreciate it. Appreciate you stepping in while my screen is messing up too.
Oh no, you straight, bro. You straight. If anything, we'll jump on the session. I'll probably jump on the session here with you, if anything. But I'll be right back, and then I definitely got you.
Okay, bro. Appreciate it. I'm sorry, everybody, for my screen. I don't really know what's going on. My computer said something about memory, and now it's going really slow. See if we can't get back to this DXY. Come on now. Y'all still with me? I'm trying here. I don't know what's going on. We're almost there. Let's see here.
Yeah, we're there.
Watch this. All right, looking at the DXY. Let's identify a cipher pattern. It's pretty close to real time as well. So we have a impulse down right here. Remember, we're gonna label all our impulses. Well, start a harmonic pattern. This is gonna be our X leg right here, X to A. So we have X right here. The market came down and made it smooth. And where it came to, we're gonna call that A. This is our X to A move. Once we've identified our X to A move, we're going to pull out the Fibonacci retracement. We want to take it from X to A. Now we need a minimum of a 38.2 to be hit. As you can see, that wicked right to the 38.2 perfectly, and move back down so we can identify that as our B leg, a valid B leg. Now that the B leg has been identified, we got to bring out the Fibonacci retracement. No, the Fibonacci extension. I'm going to bring out the Fibonacci extension. We're going to go from X down to A. We're going to bring it back up to X. As you can see that we hit our minimum requirement for our C leg, the 127 extension level has been hit. It passed the 127, but it didn't close, but it closed below it. But remember, we can even touch the 141 as long as it doesn't close above the 141. It would have been still valid. So we'll go from B all the way down. Since we've identified that the 127 has been hit, we'll label this guy C. Now, once C has been identified, this is where we're looking to get it. We're looking for a D leg to complete, which is where we'll be looking to get into the market. It's going to take a Fibonacci retracement from X all the way down to C that I don't have labeled. And as you can see, we needed it to come up to the 786. And it didn't quite come to the 786, but that's not a problem because it's in the zone. And remember, using these Fibonacci ratios, support and resistance is going to always be respected. Like if you look left and you see where your support is, I could probably go to a higher time frame, you can see, but it doesn't make it quite up to the 786. I wasn't really worried about that. I actually got into the market short anyway because it pretty much hit the zone that I was looking for. It was close enough. We talked about it with Jay and Pip, so we still decided that we considered this a valid pattern, although it didn't reach up to the 786, but understanding major support and resistance, we didn't have to get all the way back up there, but the market indeed rolled over at the decompletion. Let's see if we can find another Cypher somewhere. NZD, USD. You can find these patterns on any time frame, any pair, any stock, whatever. This works pretty much. It's just any market, any time frame. 4 hour happens to be my favorite time frame. I don't know why. I see them better there. Let's see if this is actually a cipher. We might have one here. Let's measure it out. What I'm looking at is the market making its impulse right here. X. Do I have any questions, anyone? If not, I'll just keep finding patterns. Have our XA move right here. In order to identify B, we always need a minimum retracement of a 38.2. And as you can see, we touched the 38.2 and ran away from it like it was contagious or something. So being identified that the 38.2 was hit, do have a valid B leg. Now, once B has been identified, we got to break out the Fibonacci extension. We take that guy from X up to A, back down to X. And as you can see, once again, 127 respected perfectly. Once we notice that the 127 has been hit, didn't even touch the 141, although we could have came up here, we could have broke up here. As long as we didn't close above this level, pattern would have still been valid. So we went up here, we hit the 127. Boom. We're gonna label that C, of course. Now, once we've identified C, we're looking for the market to come back down and retrace from our X to C move We're looking for it to hit the 127, which it did perfectly. Boom. 127 was hit. Decompletion. Market respected the 786, completed out a Cypher pattern. Oops. Make it look pretty. Yes. All right. Now let's go over targets and entries, which, okay, we saw that they completed at the 786. We look for X, A, B, C. Once the C move has been identified, just like we identified it, once the market pulls back down to the 786, we're actually entering right at the 786. You know what I mean? Every time. This pattern is 75, 80% rollover, a win ratio, 75, 80%. So every time I see one, I get in. It is what it is. I don't win every one, but it is what it is. So we would have looked to enter right here at the 786. As far as stops, get rid of some of this crap. Stops. All right. The rule for this is 10 pips past. You're supposed to go 10 pips past the eggs leg. Sometimes 10 pips will be pretty short when you're on higher time frames, such as 4 hour or the daily or whatnot. So the rule I use, do it the same way every time. Get it consistently, try to get the same thing. We do an inverse with a Fibonacci extension. So to get my stops on this Cypher pattern, I go from A to X with my Fibonacci extension. I go back down to A. All right. I'm going to put the stops at the 113 level. Fibonacci extension every time. Cypher pattern, take your Fibonacci extension, go from A to X, back up to A, which is a little bit inverse. It's sort of weird, but put that stop at the 113. We would have entered here. We would have had a stop down here. The pattern's knocked out both take profits, I believe. Our targets would have been, we use Fibonacci retracement for targets. So we take the Fibonacci retracement, we go from C to D with this Cypher pattern. We look for take profit 1 to be knocked out at 382. Boom. Take profit 1's not been knocked out already. And take profit 2 would have been at the 618. Actually, both take profits were knocked out on NZD USD. And this is pretty recent. So risk reward. Stops right here. Oh. This would have been the stops. Oops. That's not right. Take profit. Yo. I'm gonna come out in a minute. I bet. Sorry, guys. See the risk reward right here. Actually, this risk reward for this Cypher pattern was pretty good. Sometimes it won't be 1-to-1 for Cypher pattern, but it's a 75, 80% pattern. So, you know what I mean? It doesn't, even if it's not 1-to-1, still profit. See all that green to that red. All right. Anybody have any questions regarding the Cypher before I move to the Gartley? All right. All right.
Don't be too quiet now.
Yeah. If y'all got some questions, feel free to ask.
Yeah, unmute yourself and ask.
I'm gonna assume everybody understands the cipher, or should we find another cipher pattern? Y'all let me look. Should we be looking for some more ciphers?
Can you evaluate the Great British Pound and the yen?
Great British Pound and the yen. Let's see. Only looking for ciphers now, but let's see if it's any in there. Not really looking for trading opportunities. This is all educational. I was really supposed to be on at 2 o'clock before the market opened, but I was in Tennessee. I had to drive back to Atlanta this morning. Whoa. All right, yeah, we can go over this because I actually got burned on a cipher pattern. Well, I had my stops too short. Well, let's see. Let's see. All right. I actually got a little funky little cipher pattern that we went over in a session, one of our legacy sessions. It ended up it blew my stops out. I was working on my phone though, so I'm not sure if I had enough stop room. It's a little bit hard to chart on the phone every now and then. Nonetheless, right now, what I was looking at is this right here. I was going to call this my impulse leg. X to A. X leg. Well, X point. A point. X of A. So once I identified X of A, I knew that I had to break out the Fibonacci retracement just like every other time. From X to A, what we have here is we met the requirements of the 382. We came up to the 50. We closed below the 50. This pattern would have been, that is a valid B leg. Damn it. Now C leg looks a little funky. It's a lot of distortion in between it, but nonetheless, still the same move. All right, once B has been identified, we look for the market to extend past the A and to hit a minimum requirement of our 127. As I said before, this actually came down and broke the 141, as you can see right here. Broke past it a good little bit. That actually might be, I don't know if it hit the 1618, but it broke past 141, but it just wicked. It closed. It didn't even close below the 127. So we got the 127 right here still being respected. Price closed below it. So indeed, we have a valid this is a valid C leg. Now, even though price can't close, if price closes below this 141, the pattern would have been invalid, but it didn't. Even though it did break past the 141 and close below, we still drag it all the way down to the end of that, to the low for our C leg, for the point that we call our C leg. So we don't skip out. Just because of the rule, we don't bring our C leg here and put it where price closed. We still bring it down here because when you're going to do your targets and your stops, you still need to be getting the whole move. So we bring it down there, which we know is valid because it respected what? The 127. So once that happened, we were looking for the market to pull back from X to C. Looking to get a pullback of the 78.6, which we did. And I probably entered it somewhere like around here, but the market wasn't ready. So, boom. Heavy and strong impulse too. That was a little bit risky to try to enter that short right there anyway. Nonetheless, we would have entered here. Well, I did enter here as a matter of fact. Small lot though. That would have been the pattern, but it blew past that. Now let's see our stops. I wasn't at a laptop, so it's hard to get my stops sometimes from a cell phone. My stop should have been from A to X, back to A. Dang. It would have wicked right up to the stop. Stop loss. Talk about a stop loss on it. Hit up there and then changed. Boom. Market went down from there. So every pattern won't win. This pattern would have actually hit stops. So that's a losing cipher. Won't be many of them though. As far as what's going on right now in GJ, as far as the way I see it though, it's 4-hour chart. What? Even though it blew past my stop, it came up here to the 113, shot down, and it's approaching the 113 again. It's looking like a double top to me. I don't know. I think we just entered short. Legacy just entered short on this, but I'm not calling out a trade. This is educational, but it does look like a nice little double top right there. Nonetheless, do I have any questions? Any more questions on the cipher pattern? If not, let us move on and identify some Gartleys.
Thanks. Beautiful explanation.
Thank you. Thank you for unmuting. Now the Gartley pattern. Same thing. We're going to look for an impulse down. Well, down for the first one. It's out of the way. Just like with the cipher pattern, we're looking for an anchor leg. That's an impulse. This looks like an impulse here. If you've ever seen one, that's an impulse. You see this move right here? That is an impulse and perhaps the start of a new X to A leg. You know what I mean? All right. So now, once we've made our impulse, again, it's going to be X every time. The start of our impulse. The anchor leg is going to always be our XA move. Now with the Gartley, we use the Fibonacci retracement. Once A has been identified, we're looking for the market to pull back to create our B leg. Now with Gartley, we need a minimum retracement of the 618. If it has to at least wick to the 618. If it comes to right below the 618, it's invalid. It has to at least touch this guy. If it doesn't close there, that's fine. But it has to at least touch the 618. Cannot break the 786. So if it touches this 786, invalid pattern. We got to look for a different pattern. So we'll leave this right here. Ah, 618. All right. After we have identified our C leg, we're going to be looking for a pullback from our A to C leg for this Gartley pattern. We need a minimum retracement from A to C. We need this guy to come down at least to the 618 again. We at least need this guy to touch the 618. If it doesn't, invalid C leg for the Gartley. We'll be looking for another pattern, perhaps a bat or something else. But we have to at least come down to this 618. Now with this C leg, we can hit the 618, we can hit the 786, we can hit the 886. As long as we don't break the extreme lows of A, we can still consider this a valid Gartley pattern. If we break this A leg, or 100%, whatever you want to call it, if we break this invalid pattern, looking for something else. So come down, boom, 618. Now, Gartley gets a little bit tricky. Oh, that's a C right there. Oops. This would be our B leg. Now once C Once C has been identified, several different ways we're going to look to get D makes this pattern a little tricky. We're actually looking for an equal measured move, actually looking for an AB equals CD pattern to fulfill this Gartley pattern or to complete the D level. So what we will be needing, we'll be looking for retracement from X to A. Oh, crap. We're going to be looking for the market to pull back to the 786, but we also going to need a Fibonacci extension from A to B, back down to A. And we're looking for, now we got a nice little kill zone. We'd be looking to enter the market in between the 786 and the 127 extension of A to B. 1 second, guys, sorry. All right, sorry about that. Okay. So we'll be looking to get into the market in between the 127 and the 786, which should also be a equal measured move. So our AB leg, we clone it. Our AB move, dang, I cloned the Fibonacci extension. Let's get rid of that guy. AB is supposed to be the same length of CD. Just a little bit past, but you can see it's a, I'll call it a bigger zone. It's not gonna always be perfect, but the equal measured move would have complete our Gartley pattern. So again, D has to complete not only at the 786, but at the 127 extension of A to B, which will make an equal measured move. Our AB would actually be equal to our CD move. And we have a nice little kill zone in between the 127 and the 786. We'd be looking to get short. It won't always be as pretty. All right, let's do a bullish one then. We'll try to find some. Same thing, we'll look for impulse. Impulse always labeled as X to A. Y'all guys can unmute y'all mics and ask questions at any time. After we've identified X, our X to A move, we're going to pull out the Fibonacci retracement. We want to look for a minimum pullback of the 382. No, I mean, whoa, 618. We need a minimum pullback of the 618. We can break the 618. We cannot touch the 786. The 786 is hit. We're going to be looking for like a butterfly flat in the stomach. That's not criteria for the Gartley. So 618, boom. That guy hits at least a 618. Got a valid B leg. After B has been identified, we're going to look for Fibonacci retracement of A to B. And again, we need a minimum of the 618 retracement But unlike our B leg, we can hit 786, 886, even 100% of A. As long as we don't break past A, this pattern is still valid. Boom, end it right there. Gives us our valid C leg. Now again, we're looking for an equal measured move, AB. AB needs to equal CD in this pattern. Well, that's for a perfect Gartley, actually. A lot of the time, AB won't equal C to D, but it can still be considered a valid pattern. I'm sure we'll see one, but let's see if we can get an equal measure move right here. I'm gonna clone AB. Once we've noticed that, C has been created. Now I'm gonna drag this to C. Now, that would be our decompletion point. We need that point to complete at a couple of specific areas again. This should be around the 786 of X to A. We've been looking for that. That's the 786 perfectly. Also.
Hey, you mind clicking that ready to install button off? I appreciate it.
Oh, bro, I'm sorry. I hadn't even noticed. I'm over here and dang, I got a lot of crap going on. Sorry about that, bro. All right. Complete right at the 786. Break out the Fibonacci extension. Go from A to B. Back down to A. Yeah. Completed right in our little zone, 127, 786. Oops. And here we have a valid 222 Gartley, they called it. All right, do we have any questions? We'll go over stops and, well, we pretty much went over entries right there. Go over stops. We try to find something in the market. If not try, I'm sure we'll find some. Any questions? If not, we'll just get right in. What pound am I looking for? Let's go to Euro pound. All right, I came here because we're actually in a trade. Well, I'm still in it. I think this is a Caribbean blue trade. I can't get my screen to move. See if I can get y'all the visualization right here. This sucks. I don't know what's going on. All right, we got a Gartley right here. Actually, got a couple going on right here. Let's go back a little bit. I think this guy even would have been one. All right, so I'm looking at 3 different Gartleys right here. Even though they don't look perfect, if you use the correct stop loss and everything like that, I think they would have still been valid. So let's see if this is a valid Gartley. All right, here we got an impulse up. I hope everyone knows that this is the X to the A move right now. I'm gonna stop labeling it to save time. After we notice that we have our X to A move, our impulse leg, we'd be looking for the Fibonacci retracement and be looking for the market to make a pullback to the 618, which is a minimum minimum of the 618, and we touched the 618 right here. Could have blew past it, just not touched the 786. So do have a valid B leg right here. Boom. We also need to pull now to identify our C leg. We need a Fibonacci retracement from A to B. We need this to pull back at least to the 618. As you can see, it passed the 618, came all the way up to the 886, which is fine as long as it doesn't blow past our extreme lows of A right here. It did, so, or it didn't rather. So we do have a valid C leg right here. Now, once that's been made, we're going to do the equal measured move thing. I guess it would look better if we had it more. I guess if it was, we're just going to. After C has been identified, we're looking for a pullback of the 786, but also an extension of the 127 from A to C, from A to B to back to A. So here, from X to A, maybe I should label this because it seems a little confusing to me. Learn the way I learned it. I don't want to confuse anyone. That's X. Oops. All right, sorry about that. So we've identified C. Let's see if we would have got an equal measured move. I'm sure we didn't, but this is what we would have done to look for our decompletion. We would have cloned our A to B move. We would have drug it down to C. You can see that wouldn't work, but also equal measured moves. It's not going to be an equal measured move every time. Let's see where the 127 extension is. It's right at the 786. So D leg blew past our requirements, but let's see if the stops would have been hit. So we would have been looking to enter here, of course, right at the 786. Right at the 786 and 127 extension. But our stops, again, to get the stops for the Gartley, I do it the same way we use the Cypher pattern. Take a Fibonacci extension, we go from A to X, back. It's hard to see down there. As you can see, if I can get there, stops weren't hit on that pattern. So if we entered right here at the 786 and the 127, put our stops in the correct area at the 113, we would have actually not been stopped out. Now that's good movement. Would have been some significant red. You know, that's a 4-hour chart. Significant drawdown, but nonetheless, the market rolled over before it hit stops. So that's a winning pattern, no matter how you look at it. In that case, that this happens, If I had took this pattern, I would have drug my decompletion leg down to here. Of course, I was already in, but this is just for targets. It would have been here. It looks funny, and it doesn't look like a Gartley anymore, but we were trading the Gartley, and it still would have been a profitable trade. We'll take Fibonacci retracement from A to D with the Gartley pattern. And again, we're going to look for take profit 1 at the 38.2, take profit 2 at the 618, and you can see, boom, take profit 2 hit, take profit 1 hit. Now, when you're trading these harmonics, remember, we're not looking for the market to just, reverse. We're just looking for a retracement. So, boom, we don't get greedy. We take the 38.2. Once this trade would have hit 382, took out profit, took out our take profit 1, we would have took our stops, moved them right to break even. We would have entered up here somewhere. And then we would have rolled it out for take profit 2. We would have hit, boom, 618, knocked out before the market moved again. Let's remove all drawing too. Do I have any questions? I have a Gartley pattern back to back. What you got, bro?
Just general question I want to know on harmonic patterns. How you trade them? Do you just, as soon as you identify them, you put in your stop orders, or do you wait for additional confirmation? Look for additional confirmation like structure, or what do you do?
Yeah. Always look. So always we always gotta use structure, because like I said, sometimes even what happened here. All right, I don't want to say I'm a rookie. I'm a rookie. It hasn't been a year, so okay. I would have entered here right at the 786, especially with the 127 being right there as well. I would have entered here just because I had my correct, I had my X to A, I had my B, and I had my C. Everything was valid. So I was just waiting for D to make it down here to the, you know what I mean? Even an equal measure move. I noticed that my equal measure move wouldn't work right there. So I was waiting for D to basically get down here to the 786, of course. Let me get rid of some of this stuff, bro. So. Good question, by the way. Even this guy, remove this guy. Okay, I'll leave the stop loss up there. So once I had identified C, we would have been looking for that thing to pull back to the 786, of course. Still being a little young in the game, I would have entered. Boom, I would have entered at the 786. You can see it sort of spiked up a little bit, then it went on down. I would have entered, but I still got the patience to know that my 113 hadn't been hit yet. And once I enter these things, I'm pretty much going to use that 113. So if I had had enough ball, excuse my English, if I had enough, if I had entered right here, I would have put my stops in. I wouldn't have been worried about anything. I'm going to ride it out. I'm going to go with the stops. It would have turned over. So yeah, you enter at the 786, but all that happened is it went down here and met back at previous structure, which is always you'll notice that a lot of the time these patterns, they'll go up and it's supposed to complete at the 786, but they'll often go up and retest that X leg just because that's just the way structure goes. So it got to go up there and it actually form a double top with the X leg and take off, which is pretty much what this did. I mean, a double bottom rather. So yeah, if you're going to trade harmonics, you pretty much enter where you're supposed to enter. Say the D completes at the 786 for the Gartley. If I had A, B, and C, if they had been legit, I would have entered at the 786. Boom. It's just as simple as that. I would have entered there. But we also use, we got candlestick formations. We'll go down to a smaller time frame, see what it's doing. Whoa. So yeah, my 786 would have been right here. And we got action off of the 786, but it just didn't turn right there. It went back down. And what did it do? Tested the X leg. Boom. That's why the stops are down at the one, safe spot at the 113. Stops in. We would have been good. It would have came up. It would have knocked out our take profit 1 and our take profit 2 before it turned around. Did I answer your question, bro? Structure we always use structure. Structure's gonna always gotta use structure. Higher time frames even. But yeah. Hope I answered your question. Let's identify. I now got another one right back to back, actually. Let's get rid of this. Let's get rid of this. Boom. So our C to, I guess I better label that. Damn. What is that? There we go. All right. So our C to D impulse, which made our C to D leg, is actually the start of another impulse. So let's get rid of this stuff. The same move that was our C to D move, I can also see it as another impulse leg. This would have been C to D for our first harmonic. I'm looking at it as X to A now, because the market's going to always move it. J Pips always says it. Market moves in a harmonious fashion, and it's always going to do that. It's just the way it is. X to A. Boom. We would have brought out the Fibonacci retracement. We'd have been looking for a pullback to the minimum of a 618. We got that. Boom. Didn't hit the 786 at all. So what do we have? A valid B leg. After B is created, after we notice that we have pulled back and made a valid B leg, we'll be looking for the Fibonacci retracement from A to B, looking for that minimum of the 618. We have it. Boom, hit. Just passed it a little bit before it went. Indeed, a valid C leg here. Boom. Now we'll try to clone one and try to see if we get an equal measured move out of this one. That's the way that the Gartley is. When a Gartley perfect 222 Gartley is an equal measured move, AB does equal C to D, but not really required to form a Gartley. So boom, equal measured move. That's pretty close. Again, we got structure coming in. It pretty much came up there, and let's just see. Nice little area. Fibonacci retracement from X to A. We're looking for the 786. We actually blow past the 786 and go up to the 886, which is a completion for the bat pattern. But remember, our A to B move is what makes this a Gartley. This guy had came up to the 50% and came back down and came up. That would have been a bat pattern. But since the A did come up to the 618, all we could do is look for a Gartley. That being said, we would have been looking to get into the market here. Let's see what a 127 extension ends up at. It's important to do both. Don't just go for the 786 on this Gartley. You don't want to just go for the 786 of X of A. You also want to take your Fibonacci extension and go from A to B, bring it back down, see what a 127 is, which is in a little bit better spot. So we got a nice zone from the 786 to the 187 would have been our kill zone, which price still broke above. And our kill zone actually lines up perfectly with our A to B move, and that's very close to an equal measured move. So boom, we would have entered here. Our stops we would have went from A to X. A, X back down to A. We're going to use the 113 for our stops every single time with the Gartley pattern. Stop still intact, not hit. Boom. Let's see if the market, see what the market does for our take profits. Take profits for the Gartley pattern. We're going to use the Fibonacci retracement, and we're going to go from the A to the, whoa, that's not Fibonacci retracement. We're going to go from the A. We're going to go to A from D. Now, before I get ahead of myself, we saw that the market didn't quite make an equal measured move. It didn't quite stop at the 786. It went a little bit past the 127. Nonetheless, once it has made its move, you drag that D leg up to where it stopped at, no matter what. Because it's important for our targets and our stops and all of that stuff. So, still valid, still a valid Gartley trade, if you would. All right. Fibonacci retracement for the targets. And we can see that that's confusing. We can see that our 382, boom, take profit 1 hit, take profit 2 hit, 618, just kissed take profit 2, boom, before the market went back up. Do I have any questions? We'll do one more Gartley because I have one more back-to-back on this pair. This is one of my favorite pairs for patterns. This pair just makes pattern after pattern. I know this is a Caribbean blue favorite as well. All right, for the last pattern, and this is a trade that we're actually in with Caribbean blue. Once again, we're going to identify our XA move, our ankle leg. Boom. Go from low to this high right here, and we're going to label it just like we label all of the other guys. It's going to be an XA move. Once XA has been identified, we use the Fibonacci retracement. X to A, we're looking for a minimum requirement of the 618 to be hit. Ooh, that's close. We're going to call that a hit right there. So indeed, we'll call that, because that's the zone, and support and resistance comes in. Always got to give an account for that. So we do have, call it a valid B leg. And by now we know that once the B leg has been identified, I labeled it. Look for Fibonacci retracement, A to B. And again, we need that minimum of the 618. Went up there and touched that 786, but it's not a problem because again, we can go as far as to the extreme low of A, extreme high of A in this case. Just can't break above it. So the market came, boom, gave us a valid C. Now, once C has been identified, again, we look for an equal measured move. We need AB to equal CD, and that's for the perfect Gartley, that is, the 222 Gartley, if you would. Take our A to B move and we clone it. Try to get us a projection. which it comes down to the zone. It doesn't really have a nice little zone there. Call that Z anyway. Let's see what we're looking for. Retracement from X of A. We're looking for it to come to the 786. Boom, 786 respect. I would have entered right there. In fact, we did enter right there. We're like 30 pips up. Well, we were 30 pips up when the market opened up today. It pulled back, but it's looking ready to shoot off again. Nonetheless, okay, we got 786 respect. We take out the Fibonacci extension. We go from A to B, back up to A. And what we have is 127 and 786 lining up in the same exact spot. That's double confirmation right there. That's probably why Caribbean Blue entered. I entered with her. So the market came down again. We got in probably here. Right there, we have a legit Gartley pattern, which, let me check out something real quick. Trying to see if this might be might have a little Cypher pattern here. Yeah, all right. A little bit off topic, but I do have a little Cypher pattern possibly here. If anyone's looking to enter Euro Pound long, because we are long. Legacy is long on this. Let's see here.
Extra confirmations.
Yeah, let's see if we got any extra confirmation here. Let's get rid of these drawing tools. All right, impulse leg. I got a little impulse here. We'll call it. Got our little X to A move. We break out the Fibonacci retracement. No. Oh, that guy hit the 618. Let me see here. All right. Yeah, that closed beyond the 618. That's not going to be a cipher nonetheless. Nonetheless, we do have this level being respected. I'm not going to call a trade, but I do like this long. And it's probably at just about the prime spot to enter. But this is only educational. And before anybody goes to sleep on me, does anybody have any questions about the Cypher pattern or the Gartley pattern? I know y'all ready to get to trading. Anybody? In that case, man, I appreciate y'all coming out. Without any further ado, I'm going to turn it over to CB.
Donnie, that was an awesome session, man. I hope everyone was able to get mad nuggets, because I Certainly did. Thank you so much.
Not a problem. Appreciate everybody coming out, man.
Thanks, everyone. See you next Sunday at 2 p.m. Eastern.
Right on.
All right.
Thanks, Tony.
Not a problem.